It's a big day for trading in the US dollar and currency markets as we're seeing the honeymoon phase following the US election start to really unravel and the US dollar index starting to break down, igniting rebounds in other currencies. We after the US election, we saw a huge inflow of capital out of defensive havens like gold and the Japanese yen, and money just plowing into US stocks, plowing into the US dollar as people expected that Trump's election would be good for business, that things would go smoothly, and that the potential for a resumption of inflation pressures as well, and the potential that the Fed could start to raise interest rates more aggressively than they have been the last couple of years. So, however, now a lot of these trades are starting to unravel, and as we look here, we start with the Dow. The Dow has now broken back under 20,000. We've peaked up above it. It looks like we've seen what's a buying climax, and actually, if we look here, we even have a very small island top here having formed in the U.S. Market, because we had this little gap up, this little gap down, leaves all of these people caught out that had bought up here. And interestingly enough, when we also got this new high, big negative RSI divergence, told you that upward momentum is slowing. This looks like exhaustion, buying climax, island top, and even if this was a 1 day instead of a 2 day drop, this would even be an evening star candle. So it's not quite an evening star, but it's the same kind of idea, close enough to me to show that we've got a significant top forming here in the U.S. market. Meanwhile, we now go to the U.S. dollar index. So Dow's taken out 20,000. The next big hurdle to collapse here, 100 on the U.S. dollar index. U.S. dollar index before the election was at 95, spiked up to a high just short of 104 by the end of December as people really ramped up their expectations for the Fed. Now, since mid-December, we have seen these expectations slowly easing back. We are seeing here the RSI drifted under 50 and has continued to drift lower. So this is just very steady distribution here in a falling channel. Today, decisive breakdown below 100, decisive breakdown below 99.80 here. And now we're into a new downswing. First supports in at around 99.30, then around 99 even. But suffice it to say, the U.S. dollar looks like it is now peaked and is starting to trend lower. Why? Because what we're starting to see is the potential for disruptions to the U.S. economy from Trump's trade policies and other policies for that matter. The changes to immigration and refugee rules has caused a huge kerfuffle over the weekend, and you can just imagine with something like that, then what happens if you start getting into trade disputes. And well, Trump has been accusing China of devaluing its currency and also talking about renegotiating NAFTA and putting its sights on Mexico. Well, now it's turned its sights to Europe. They've talked about Germany as devaluing its currency through the euro. It doesn't matter whether they're actually keeping the euro itself depressed or not. That was a bit of a smokescreen from Merkel today. But what was most important, though, is that just having Germany within the euro with all these other current countries devalues its currency relative to where it would be if the Deutschmark, if they still had the standalone Deutschmark. And that's what's important, and that's what Trump's going after. They've also talked about the potential trade deal between Europe and the United States as basically being dead in the water. We saw just a month or two ago how much of a struggle it was for them just to get a deal with Canada, and to do one with the United States at this point is looking pretty much impossible. So we're starting to see the political risks start to rise. We're starting to see the fractures start to rise. So that, and what's that doing? It's decreasing the feeling that the Fed could be hawkish. It's also the other thing is this: we're seeing rising inflation in Europe. So all of a sudden, the ECB may not be able to be as much pedal to metal as they have been in the past. So what does that mean? It means that the euro has been actually starting to rebound, and the U.S. dollar could come off if that difference, that gulf between the Fed and the ECB starts to narrow. That could also be bearish for U.S. dollar. Where are we seeing the money coming in with all these political risks starting to pick up? It's going back into the defensive havens. Take a look at gold today. The gold actually has broken out over the 1200 level. It's on its way back up now. And while we're waiting for that chart to look at this here, gold is totally starting to pick up. It had this base, it's had a consolidation here, it's digested these gains, and it's back on an upswing. It's back above 1200. This massively overbought, and look what happened here when we were oversold. We got a little overbought. We came back in this correction. Look at this, RSI bounced off 50. That's confirmation of an uptrend, and now the upward momentum starting to kick in again. And look at this, there's a nice little hammer candle down there. Said bears were exhausted. a spinning top here, and now a big bullish candle here. So that's saying a real upturn. First resistance here in this 1216 to 1218 area, then up closer to 1230. Gold really starting to move. Gold is the fear metal. Gold is gold going up tells you that people are getting more worried about politics and political risk and what that could mean for the world economy. Look at the yen, same thing. We had this yen just got crushed. This was the U.S. dollar going up and down. This was the U.S. dollar steamrolling the yen after the election, just relentlessly driving up. Now look, double top, negative divergence in the RSI. RSI trending lower. Look at this, broke 50, retesting 50 as resistance. The reversal of polarity. Now it's heading lower again. That's confirmation of a downtrend in there. Double top. We fell into this Fibonacci range here between 112.40 and 115.50. We tested up near the top earlier in the week. Now we're starting to tumble. Now we're starting to see 115 fell, 114 fell. Now we're back here at the bottom of this. If this starts to break 112.35, next potential support 111.25, and then around the 110 round number here. So we're seeing capital starting to go back out of the U.S. dollar, back into the defensive havens. Tells us that we're seeing a real shift in sentiment, a real change, and this is heading into the Fed meeting tomorrow, where we could see more activity based on people looking at the statement to see how many interest rate hikes could we actually expect from the U.S. When we were at 95, people were thinking 2. At 100, people thinking 4. At 104, people thinking 5 or more. So it's a big question. The Fed's not likely to move on rates this month, but if they are going to do 4, then they need to go in March. So we'll see what happens.